So we wanted to create the first digital asset class platform where you can sleep while investing your money. And that's where the name came from, because we started noticing that people deep in Web3 are spending all their time on Discord, on Telegram, on Twitter.
Decentralized finance has been a new craze and has been booming in recent times, with a total value locked surpassing $200 billion earlier this year itself. But there is still a large chunk of the population who is skeptical about exploring this new technology. Pillow Fund is on the drive to make DeFi accessible to all by making it as simple as tapping on the smartphone. Through this digital asset management app, users can simply invest and earn returns in crypto. So today we have Arindam Roy with us, who is the founder of Pillow, to discuss the venture and share some key insights with us. Arindam has had a rich experience in product management, and he is strongly focused and dedicated to build on the philosophy of hassle-free DeFi for everyone. Welcome to CuratedX, Arindam. It's a pleasure to have you with us today, and really look forward to the interaction.
Thanks a lot, Chavi. And hey, everyone. Thank you, Chavi, for the wonderful introduction. And very excited to be here with CuratedX and with Chavi and discuss everything digital assets and DeFi and accessibility and Web3 in general.
Lovely. To get things started, why don't you tell us a little bit about your background, what led you to venture into something like Pillow?
Got it. I've been a developer for the early phases of my career. So I largely wrote code for startups, for MNCs, before building a lot of products, building and leading product teams. Spent time both in Southeast Asia, in Singapore and some other Asian countries, and in India, largely catering to the payments, catering to the payment space, fintech space, regtech space, and partly in e-commerce as well. So my experience with fintech in general has been that financial enablement is one of the key problem statements that generally needs to be solved, and we need to look at various levers of solving it. My last experience was leading some of the India product verticals for Hyperverge, which is India's largest regtech enabler, where we looked at solving problems like anti-money laundering, KYC, remote onboarding for banks, remote onboarding for Aadhaar-based services for the government and things as such, and try and solve those problem statements to see how to get mass users at scale. At the same time, I started exploring crypto back in sort of 2017. Then promptly lost it all in the crash, as everyone else does, and then that's when I was looking at let's go deeper in the technology and sort of figure out how all of this works. And that was when smart contracts were just starting. From there, started using DeFi back in the days of Ethereum being the only option, sort of early apps like Aave, Maker, Compound, and then from there started learning Solidity, how to write smart contracts, started contributing to some DAOs, and then met my co-founder Rajat, who was leading US charter for Hyperverge. And along the way, we discovered accessibility being a major problem statement, and sort of started building Pillow. Right.
Lovely, very interesting. I think you always grow something from the very niche. You try exploring different avenues, different outlooks, and it's then when you realize, okay, this is something which I'm keenly interested in, and I see a long-term future spanning here. So also, Arindam, there's a very intriguing line that says, don't let your assets fall asleep when they can be earning up to 18% in return. So just to take it from there, can you highlight more about the Pillow Fund, what it does in terms of what kind of problem is being solved? And it would be really interesting to hear why you named it as Pillow.
Right. So the primary way retail investors have figured out wealth appreciation, wealth creation from digital assets is that we buy a certain asset, set asset class. That asset class appreciates in value against whatever our fiat currency metric is, USD, INR, whatever we want to use, and then that's how we make money. Right? It's the same way we equated it to equity markets or debt markets, or the way that we have thought, right? The key difference is that unlike securities, digital assets are transferable. They are also programmable, which means I can do things with them that I can't do with a share, right? I can do things like take custody. I can do things like fractionalize it. I can do things like lend it. I can do things like borrow it, right? I can program a digital asset. So that led to the advent of smart contracts and then led to the entire growth of the DeFi ecosystem. But retail somehow did not pick up on the fact that digital assets are also transferable, programmable, loanable, borrowable, and the entire finance industry running on top of it, right? So that's sort of where we started, that we wanted to change the mindset of the retail investor from, hey, I'll buy an asset, the asset will appreciate in value, and that's how I'll make money, to the point where, hey, if you have an asset, why don't you figure out how to lend it to earn interest? Why don't you figure out how to provide liquidity to liquidity pools to earn interest, right? And such concepts. So we started a Discord server purely altruistic in nature back in the day to just educate users on doing these things. People who had large amounts of Ethereum or Bitcoin or stable coins or any other asset, Matic, Solana, any other asset, on what they can do. And we kept running into the same problem statements, right? I don't know how to take custody. I don't know how to provide liquidity. I don't know how to pay gas fees. I can't even calculate what gas fees look like. I don't know how to bridge from blockchain A to blockchain B. Right? Some scam tokens get airdropped to their wallet and people end up interacting with it and lose their money, right? The same problems kept repeating, even at the scale of thousands of users. So we felt there was a technology layer where we can introduce this, that the primary blocker to accessibility in digital asset finance, to our understanding, has been that it's ridiculously complex for retail user to understand. The learning curve is very, very high, from custody to bridging between multiple networks to paying gas fees to calculating gas fees in a third token, to figuring out taxes, to figuring out which tokenomics to buy, all of this, uh, scaling all of this sort of complexity. And then from there, also having to do a lot of market research to see, is this tokenomics worth something investing into? Does this token make sense? What is the financial engineering behind this, right? It's just a lot of work for to expect from a person, who has to do so much else in life. So we wanted to create the first digital asset class platform where you can sleep while investing your money. And that's where the name came from, because we started noticing that people deep in Web3 are spending all their time on Discord, on Telegram, on Twitter, just finding alpha, trying to figure out where to invest in, and not sleeping at all. And sort of that's where we decided, hey, can we create a platform of its kind where people get access to all the benefits of digital asset financing, the best interest rates, the best lending rates, and in the future, sort of a lot of other things that Pillow will build, while keeping the experience simple, easy to understand, and relatable, right? So that's where sort of the name and the product thesis comes from.
Lovely. Sounds very, very interesting. And I think you hit the nail at the right thing where you said that, yes, there are a lot of complexities for a layman to understand as to how do we get into this space. And one definitely ends in a rabbit hole when they start figuring out, okay, what is happening here? And it seems like you've caught hold of the right target segment as well to just simplify things for them, and picking on that niche where Pillow does all the intensive research internally to get those high returns for the users. So one thing which really caught my attention was also the no lock-in, no transaction fees, and complete liquidity feature that Pillow offers. So how do you ensure this? And also, how do you ensure such high returns of about close to 18% on stablecoin deposits?
Right. So the way our investments are structured is that we don't involve ourselves in any trading, or any unsecured lending, under collateralized lending, even within DeFi. We largely do over collateralized lending. We do like asset liquidity pools, and things like that. So that helps us ensure that we are liquid at all times. Basically, the custody always remains with us. We're always in fully liquid financial instruments where we can exit immediately, and that helps us to enable immediate instant exits for our users, which we believe is one of our strongest offerings. Our typical exits have been less than 5 minutes for a retail user to sort of come in and be able to exit, right? And even for very large volume exits, we have taken less than 30 minutes to give exits to people, right? Which is something that we're very excited about. So I think the reason is that we don't, as a product philosophy, we are currently not investing assets into either illiquid pools or pools that have certain lockup or pools that have any market risk associated with it, so that we can remain 100% liquid at all times, and that then gives out exit to the users, right? And interest rates are fundamentally a function of the borrowing demand for a particular asset on the blockchain. You'll see that Bitcoin and Ethereum have different interest rates. Then we're launching multiple other tokens. Matic is going live on Pillow in a couple of weeks. Just for reference for future listeners of the podcast, we spoke about this on 1st June 2022. And that will have a different interest rate, of course, right? All assets, the essentially the interest rate is defined by the market demand for borrowing a particular asset and the things that they can do with that asset. And interest rates will obviously, go up and down with time. They'll be a reflection of what the market feels about a particular asset. But what we try and do is, within the risk framework that I just described, we try and take the best bets for the users, and we try and pass on most of the yield generated to the users, right? And that's how we're able to beat the market in returns provided to users.
Great, great. Absolutely. Also, just circling back to what you mentioned, right? Because there is a lot of knowledge gap, and we've also seen with the complexities in the technology, there are a large number of hacks or compromises in Web3 platforms that have started coming up these days due to maybe, like I said, complexity of platforms and apps. Be it an example could be an Axie Infinity Ronin hack, or even a lot of DeFi platforms falling prey to alterations in the smart contracts or things like that. So what is your view on this, and how does Pillow ensure safety and security of funds?
Got it. So our stance has been is that first, I think it's unfortunate, but I think it's a rite of passage for any industry to sort of go through this. Hacks are not unique to the Web3 world. It's just that they get a lot more publicity. Hacks are fairly common, data breaches, although none of this is appreciated or defensible. I think the industry as a whole continues to come together and try and solve these hacks. Primarily, we have seen the bug bounty programs for blue chip DeFi protocols become fairly stringent. Much larger rewards. You are much more incentivized to become a white hat hacker and report the exploit for a hefty bounty rather than try and actually exploit the vulnerability. Second is most CeFi platforms have come together to ensure that any digital assets acquired by malicious means will not be provided an exit via fiat currency, basically ensuring that the assets are stuck in that wallet and not able to be exited, essentially closing off exit routes for the user. The third thing and more important thing is that on-chain data tracking has become much better with tools like Dune and Nansen and so many of the other wonderful tools out there. This ensures that sort of wallets that get associated with any of these malicious activities, people refuse to interact with these wallets. These wallets then are not able to send funds anywhere, not exit it anywhere, not swap anywhere, and that also sort of helps provide on-chain justice as well for sort of these people, right? So I think over time this industry is becoming more and more fraud-proof, fraud-resistant, and this only gets better with us. At Pillow, we take a very conservative view to investing, so we tend to stay very much well within the range of super high quality blue chip protocols that have been around for years at this point, have already managed multiple billions of dollars, and have significantly strong bug bounty programs, have multiple smart contract audits, have audits updated regularly, have a strong team behind them, have continuously delivered on their roadmap, have strong tokenomics. So there's a lot of work that we do behind the scenes, and typically our stance has been to be as conservative as possible. And within that conservatism framework, whatever returns come out that we can do for our users, we pass that on. But our framework has been to be very, very conservative and look for reasons to not invest rather than reasons to invest when we look at a protocol. Right? And that has helped us sort of keep our users' money safe and provide very high returns on them even in these tumultuous times, right?
Absolutely. I think that is very important when you are in this business where there are spikes and downfalls within a millisecond. It is very important to realize which is the best bet you're taking and have that appropriate risk return payoff back in the mind and set for you. Also taking it forward from there, there are so many use cases being developed every second day, leveraging blockchain technology, and DeFi, NFTs, metaverse are just some broad areas that we keep hearing about. So according to you, what would be two other problem statements that you think are being solved in the Web3 space and that you are positive about?
Right. So the problem statement that I'm most excited about from a consumer perspective is credit scoring and unsecured or under-collateralized lending on chain. I think, then the second adjunct problem to that would be on-chain identity. How do we take identity on-chain? How do we let users keep custody of their identity, but at the same time be able to help people identify themselves, right? So with ZK proofs and so many of the other concepts coming out, I think that's something. These are two very closely related problem statements. Um, uh, so I think instead of the typical way where we do lending today on the blockchain, which is over collateralized, I think under collateralized or unsecured lending can unlock a lot more capital efficiency on blockchain, unlock a lot more innovation to happen, and a lot of wealth to be created via digital assets and maintained on chain. So I think that's a problem statement that I'm very, very excited about. I'm also very, very excited about how scaling happens, particularly on Ethereum. We are seeing optimistic rollups such as Optimism and Arbitrum seeing heavy volumes of transactions. On the zero knowledge proofs, on the ZK side, we have already seen ZK Sync being live with a couple of dApps, and then we are also seeing Starknet come out from the Starkwave team. So I think that's a very interesting trend on in terms of rollups. Of course, there are also alternative solutions like Polygon's POS chain, and Polygon is now coming out with a bunch of rollup solutions, including Hermes, Nightfall, and so many of the other ones. So it'll be a very interesting space for us to observe as to which rollup solutions work really well. So that's a space that I want to track quite closely. The third trend that I would talk about is app chains or app specific chains. For example, the Bored Ape Yard Club team recently, Yugal spoke about a ape chain, which is something that they have in mind specifically for users of Bored Ape Yacht Club and their own related exchanges. Even Axie has their own application specific chain, and I think multiple teams are betting. Avalanche is betting, Polygon is betting with subnets and supernets respectively. So I think that will be very interesting to see how applications leverage their own side chains or app chains to serve the users better. So I think yeah, those would be the three trends. From the consumer lens, under collateralized and unsecured lending combined with on-chain credit scoring and on-chain identity. On the technology and scaling side, I would say rollups and how they play out, particularly ZK versus optimistic and the multiple teams that are building solutions on each of these. And on the application side, I would say app chains and how they scale user-facing applications to very, very large scales.
Great. It's great how you put different hats and then look at the technology, how it may grow and how it may benefit the landscape in the larger term and have the ecosystem around it. So also digital assets are taking the world by storm and in the process transforming the global financial and investment landscape. It is an ever-growing space with regulations in some regions and boost to the technology in some of the others. So what does the future of digital assets as an ecosystem look like to you, let's say in the next 5 years or so? And also specifically, if we talk about the Indian ecosystem, how do you see the crypto regulations impacting?
Got it. So my view is that it will be the future has to look like cooperation and then anything else. I think both systems will continue to exist. We will have the traditional finance economy that we're used to and has its own advantages and disadvantages, but serves majority of the population. Then we currently have our own digital economy, which we're setting up with the help of DeFi and digital assets and the other things. So I think both of them will have to coexist. I also think regulations while coming now were always expected. Any asset class that has impact on finances of users, and now with the last couple of years of insane adoption of crypto, now millions and millions of people across the world are holding crypto. So crypto digital assets have become custodians of citizen wealth. So it is legitimate for regulators to get involved and ensure that users are adequately protected. So I think it will be the best outcome that I'm hoping for is that there's a lot of coordination and a lot of people listening to different perspectives in the space. It will also be a function of how the bureaucratic system, the legislative system in a particular geography works. But what we are hoping to see as an industry is, increase cooperation, increase adoption, and increase listening to each other's viewpoints. So that there's a co-creation consensus, and then there is a coexistence consensus. Particular economies at least, right? For example, things like creator economies, etc., are wildly better in the Web3 space than they can ever be in the traditional finance space. We can see how NFTs, for example, have empowered artists and creators to monetize on their work properly. We are seeing a lot of intellectual property being moved across on NFTs, right? It's been easily trackable. It has cut down a lot of middlemen. So there are industries that are clearly getting benefited. So we hope to see a lot more, increased cooperation from both regulatory authorities and traditional finance industry to sort of create the clear coexistence charter for the next decade also.
Absolutely. Like you said, right, co-creation and coexistence is going to be the way ahead, specifically for this space, because we see that it is so much community driven with DAOs coming up and everything be decentralized. That's the entire gist of having something which is a creator economy in itself. So before we wrap up, as it is said, right, a founder is not just a visionary, but someone who passionately works towards one goal with full heart and soul. And I'm sure your journey may have been nothing different. If you have to share one key learning as a founder from your Web3 journey, which one would it be and why?
Good. So I think my and we are fairly young as a company, but my main advice to anyone who is looking to start, right, would be to have a very long-term view and not decide what you want to build basis market cycles or basis how the industry is feeling about prices going up or down and things like that. So I think it is important. Price movements should be important to investors and should be important to users and everyone else. But a builder fundamentally has to take a slightly longer missionary view than a mercenary view, is how I look at it. So if you're going to allocate your time, energy, personal wealth, mental bandwidth, everything else to building this, uh, take the time to sit down and think whether this is something you are uh, willing to do for 5 to 10 years, and a space that you want to commit to for the next decade or so, and only then take the leap. Till then, I think there are so many opportunities in the Web3 space that I actually believe not everyone has to start up immediately. Join the Web3 space either as a user or a community member, DAO member, start contributing, start exploring the space and build your comfort with it, build relationships, build conviction on the problem statement that you want to do, and only then jump in. And if you do jump in and you are right now, obviously markets have changed quite a bit in the last quarter or so. Try and take a market agnostic view of the problem statement that you're solving. Pick fundamental challenges that this space needs solving, and then stick to them and try and solve them the best you can.
Lovely. And also, I think the Web3 community is so welcoming. People are very, very reachable. It's good to talk to people, discuss what you're wanting to do, get ideas, and then brainstorm and get to what you want to do. So, on that
Absolutely.
note, I would like to thank you for being with us today and sharing your journey. It's really an inspiration to hear from founders like you. Your product will definitely be an enabler to bring the next wave of mass adoption of digital assets in India and across the world. That is some brilliant work that you and your team are doing, and we wish you all the very best for the same. Thank you once again, Arindam, for taking out time and being a part of CuratedX.
Thanks a lot, Chavi, for hosting me. And I wish all the very best to CuratedX. I think the work that you guys are doing is absolutely phenomenal. And yeah, we hope to continue speaking and continue bringing a lot more users to the Web3 space.